Welcome to Fibocan's YouTube channel. I am Prabhu KB, CEO of Fibocan. As you are aware, we are into the business of enabling wealth through training, coaching, mentoring, enabling clients devise their own investment strategies, enabling students and developing new investors through our training programs. We have released our series of training modules in our Fibocan company's website, module 1 to 16. That has been released in English, which provides basics of banking up to income tax on derivatives. Shortly, we will be rolling out our Tanglish video, Tamil and English. Based on the success, we will be going for Hindi and other languages as well. Right? In every video, we discuss what happened, what will happen, why, when and how it will happen, which is why I request everyone to watch the video till the end. Today is March 11, 2023, Saturday. As you know, as always, every Saturday in this channel, we release global market videos. We discuss what happened last week, what will happen, why it happened, what will happen this week, how it will happen. All those things we will discuss. In global markets, we always discuss Dow, S&P, Nasdaq, FTSE, CBOE VIX. Then you have dollar index and other things we will discuss. Dollar index and INR, USD INR, then US 10-year yield and Brent and NYMEX we discuss. To begin with, we will start with dollar index. To begin with, we will start with the global markets, stock markets. Dow, Nasdaq and S&P. Dow closed 31,909.96, 4.4% down in this week, that is in the last week. That is 6th March to 10th of March, and Nasdaq fell 4.7% down. S&P fell Nasdaq closed at 11,138.89, 4.7% down. S&P 3861.59, 4.5% down. FTSE 7748.35, 2.5% down. If you recollect, last week we had put our monthly closure, okay, because we talked of February month, how it closed and what we can expect in the month of March. As we had stated, February month closed, and we also said that that's a very negative closing, because in the monthly chart it formed bearish bar reversal and bearish engulf and closed, which is extremely negative. Subsequently, what had happened this week, all the indices formed a solid red candle. To begin with, let us start with Dow. So Dow, what it formed? First and foremost, Dow on Thursday, that is on the daily chart on Thursday, it formed a solid big red candle and broke below the 200-day moving average after a long time. This is the first time it broke the 200-day moving average after a long time. After which, yesterday, Friday, it made a desperate attempt to cross over that. In fact, at one point in time, yesterday, it had formed a bullish hammer type of a candle, and had it closed that, I would have said that it is a fantastic reversal. But that was not to happen. It formed a solid red candle and decisively broke close below the, on Thursday, broke the 200-day moving decisively. Yesterday, it closed below the 200-day decisively. That means for a long time to come, Dow, S&P and global markets are going to go down. Dow, we are talking of Dow. First, let's complete Dow. That's number one. In the weekly chart, so Dow is now below all the daily moving averages. In the weekly chart, Dow is below the 50-week moving average. So Dow formed a solid red candle in the weekly chart, and it is a 200-week moving average is acting as a support. The 50-week moving average is broken, so that's not a good sign. That means 50-week means what? It means it is 4 years average, which is not a good sign, okay. And it formed a solid red candle. In the monthly, it has formed a red candle with a long upper wick, because for the first part of this month, it tried to go up, because of which it has formed an upper wick which was touching the Bollinger middle band. Now it has formed a red candle, and there is no way it can form a solid green candle in this month. Okay, even if it forms a doji or anything, which definitely is a reversal, but the chances are very limited. The reason being, in the daily chart it has fallen so much. That's one. Second thing, one more thing we have to note is Dow is around 4% below the 2022 close. Okay, so which is not a good sign. Now, when we analyze the monthly chart, as I mentioned, it has formed a solid red candle with an upper wick. Also, now the only support that is available is 50-month moving average. 50-month is again 4 years average. So market is looking terrible. Global markets is looking terrible. But unfortunately, for my Indian viewers, I am saying, our Indian channels, TV channels, analysts, everyone will come and say, oh, India is great, India is, yeah, oh, all those things, our market is resilient. Nothing is resilient. Please stay away. If you are a small investor, you want money to be protected, I am telling you, till normalcy restores in markets, please put your money in fixed deposits that will earn you safe interest. I am telling in small investors' interest. Okay, if somebody wants to take a risk, it is up to them. Okay, but all these channel people, they will say, I am sorry to state that they are neither fundamental nor technical. They have to, if they are fundamental, they have to say fundamental valuation. If they are technical, they have to talk technical. Barring few analysts who come on the TV, invited guests, unfortunately, most of them don't talk sense, don't make any sense. They just say buy, buy, buy. When those people have to be asked in 2021, when whoever recommended IT stocks, 2021 beginning, where are those people who had recommended IT stocks? What is the valuation of those stocks now? Those guys have to be answerable. But unfortunately, that is not the case. Hence, anyway, it is up to them. I don't want to go on talking about them. But my intention is small investors should be safe. So, if global markets is in such a trouble, obviously Indian market also will be in trouble. We are not resilient. We are not living in an island. We are also integrated economy. That's the point I am trying to make. Please understand that. Okay. Now, let's go to Nasdaq. See, Nasdaq, it is looking terrible. Nasdaq is terrible. If you recollect, last to last week we said that it has broken below the 50-week in the weekly chart. Again, in the weekly chart, it formed a solid big red candle like Dow, bearish engulf, and also strong bearish bar reversal, which is extremely negative. All the indices formed that, be it Dow, S&P or Nasdaq. That's extremely negative. Okay. Second thing is that it broke, it managed to close above the 50-week moving average last week. However, this week it has broken that decisively. So it is now above, below the 50-week moving average, below the 50-week moving average, below the 200-week moving average, which is not a good sign. In the monthly chart, it is a solid red candle. It is below the 50-month moving average. Below the 50-month moving average, it has gone below that. That's not a good sign. Now that will start acting as a resistance if it is not able to close above. So Nasdaq is looking weak. Those people who are saying that Indian IT stocks are resilient, sorry, we are not resilient. Yes, if in US markets, in US financial companies or banking companies, they want to save cost, they will outsource more to India, which means Indian ITs will benefit. But notwithstanding that, the immediate effect is we will mimic what is happening in the global markets. Hence, be cautious with Indian market. That is what I can say. So Nasdaq is looking terrible. Of course, everything is looking terrible. S&P, as I said, last week it formed a small green candle. This week again the same story. Bearish engulf, strong bearish bar reversal. It opened a gap down. And again the same story, S&P, Dow, Nasdaq on Thursday, Friday, the same story. There is no different. It formed a solid red candle and it is below all the key levels. So S&P, it is above the 50-month moving average. Okay, but 50-week moving average, it is below and it is going to act as a resistance. Okay, support is 200-week moving average. So of course 200-week moving average is way below for Dow and S&P, but 50-week is broken. If that is going to act as a resistance, forget any up move anybody is thinking. Okay, this is the reality. I am telling from the charts, unless otherwise something dramatic happens, which I don't know, I can't think. See, dramatic something positive to happen is very difficult. Negative, dramatic, anything can happen anytime. Okay, that's the reality. So with all these things, S&P is also looking weak. FTSE, we had said that FTSE was the strongest of the index. Now FTSE is also started showing weakness and cracks have fallen. FTSE in the daily chart, it is below the Bollinger lower band. Of course, Dow, S&P, Nasdaq is sliding down along the Bollinger lower band. Okay, FTSE has broken the Bollinger lower band, and in the FTSE, it formed a solid red candle in the weekly chart. In the monthly chart, till now it has formed a solid red candle. If this trend continues, which I am confident will continue, it will be the first reversal in the monthly chart. Then that means you can't expect a big runaway move that FTSE was doing till this time. That is going to have a roadblock. But still, FTSE for the year 2023, I still have a feeling that it might close on the positive, but other indices, we cannot say so. So FTSE is also looking weak. So there is no place to hide for global market investors now. VIX, obviously, what had happened? Till last week, we had said that VIX is a solid red candle it formed, but after forming such a candle, it formed a solid green candle this week, and it is now reversed. The downtrend is arrested, it has gone up. Why? Because the global markets has fallen, VIX, the volatility has increased. So it's a volatility, it's a CBOE VIX is a reflection of volatility that has increased. Hence, combining these three things, all we can say is that global markets are going to be volatile, and under these conditions, it is better that we follow global markets. And I will also tell you a small thing, that anyone who is following Indian markets, one thumb rule you can follow, traders. If cryptocurrencies, Bitcoin in particular, Bitcoin in particular, if it falls, you can safely say that all the global market indices will fall. Why? Because it is a risk on or risk off trade. That is something which you please bear in mind. Next is dollar index, we said, right? 104.552. So dollar index in the weekly, it formed a doji. And a slightly upper wick, and it could not cross the 50-week moving average. It touched the 50-week upper moving average, but it could not stay above it. Hence, now that is acting as a very strong resistance, because last week it formed a solid red candle, and this week it is doji. So because of this, what we expect is that in this entire month, we are expecting a sideways movement. Why? Because in the monthly chart, last month it formed a solid green candle, after which till now it has formed a small red candle, a spinning top type of candle with a slightly upper wick. It's more of a spinning top, and it is taking support at the 10 exponential moving average, 10-month exponential moving average. Hence, we don't expect a big downfall. Neither there is up move is ruled out. Big downfall is also not possible. Hence, we expect some more sideways movement. In the daily, what had happened, it could not stay above the 100 moving average. Of course, 200 is above. It is taking support at the 50. It stayed above 100 moving average for a brief period of time, after which it came down. So now it is above 50, but below 100 and well below 200 day moving average. So that is where it is. Hence, we expect next week also a sideways movement, not a big fall that we are expecting. Next, when we analyze the individual components, Euro versus USD. Euro versus USD is 1.643. Of course, Euro versus USD and GBP USD, it more or less the same pattern. Hence, we will combine that. GBP USD is 1.2028. So in the weekly, it formed a spinning top, while GBP USD formed a doji in the weekly chart. Okay. In the monthly chart, Euro versus USD formed a spinning top, while GBP USD formed a doji. Whether it is doji or spinning top, it means that indecision. So after a big move in the monthly downfall it formed last month, obviously you don't expect another big fall unless otherwise it is a trending down. Hence now we expected a sideways movement, obviously, which when it is rolled up in dollar index, it forms sideways. That is how it is structured. Okay. So in the daily, it is Euro versus USD, it is above 50 and 100 DEMA, but below 200 DMA. Okay, whereas GBP versus USD, it just managed to cross the DMA, broke below 200 DMA, but managed to cross about 200 day. Broke briefly, GBP USD broke briefly 200 day moving average also, but managed to cross that and also crossed 100 day moving average and slightly above 100 moving average. So Euro GB USD, Euro is relatively looking stronger now when you compare with GBP versus USD. That is what it is. But don't expect big up move or down move, because the type of candle it has formed, it's a sideways candle. That is what I would read from the technical charts. Next is USD JPY. USD JPY is more or less mimics what is there in the dollar index. It is at 134.98. It formed an evening star in the weekly. What is evening star? A significant uptrend, after which a doji or a spinning top in the previous week it formed, and in this week it formed a solid red candle. That is an evening star. It is a perfect reversal combining three candles. I would request people to view my Fibocan company's modules, educational modules. Module 10, we are covering candlesticks, where we have extensively covered this. So that is something which will be useful. So that is where it is. Evening star, spinning top. In the monthly, it is formed a spinning top, but above the exponential moving average. In the daily, it is below the 100 and 200, but it is above 50 DMA. It is the same as that of dollar index. So dollar index, whatever it is there, it mimics that. USD INR, it is 81.965. It formed a spinning top. It formed a spinning top. In the daily now, it has in the weekly, it has formed a spinning top after a solid red candle in the previous week. In the monthly, as I had indicated, last month though it closed green, it is forming a rounding top. So normally if it forms like this rounding top, and the exponential moving average and the Bollinger Middleman goes in a rounding pattern, that means at some stage there is a potential for a big fall. That can happen, or if the trend reverses in the lower time frame, then it can bounce off also. That is possible. Both are possible, but the probability of falling down is more if it trends for some more time. For some more time means another 1 or 2 months. If it trends that way, you can expect a fall. When we analyze the daily, what had happened, the 100-day and 200-day moving average is, now the price is below that level. 100 and 200-day moving average is somewhere around 82.13 or 01 levels. 100 and 50, they are converging. So converging, and 50 is well below, 200 is well below, 50 and 100 is converging, and the price could not break past the 50 and 100, whereas 200 is well below, which means this 50 and 100 will act as a very strong resistance, while 200 will act as a very strong support for some more time. So which when we combine and when we analyze in the monthly chart, unless otherwise it bounces off strongly going near the 200-day moving average and trend reverses, we expect some more sideways movement, and ultimately a fall also cannot be ruled out. That is what it is. So then that means it is actually a good sign from an Indian perspective, because dollar weakening against rupee, it is going to help in many factors, but yes, it is going to be not so beneficial for exporters, but nevertheless some wins, some loses, but large number of people, if it is benefiting, I am for it. Next is US 10-year yield at 3.704. See what had happened. US 10-year yield, after a significant up move last month, which we had said that significant up move, green candle, till now it has formed a bearish harami, or a bearish dark cloud cover with the upper shooting star, right? And it has formed in the weekly, it has formed a evening star, right? Evening, it has formed a evening star. Evening star. What is evening star? Which I explained earlier, right? A solid green candle, doji, after which a red candle. So in the daily, it has formed solid red candle, and it is now below the Bollinger lower band, which means the trend has significantly gone down. But the only solace over here for US 10-year yield is that the 50 and 100 is very close and the current price is slightly above that. That means there is a chance that it can take support here and bounce off. That probability cannot be ruled out. However, the short-term trend is significantly down, and in the weekly, since it has formed an evening star, next month there can be a next week. That is, there can be a small green candle or a slightly up move cannot be ruled out. Also, because in the daily it is near the 150 moving average. From there it can bounce. That is what it is. Next is Brent and NYMEX. Brent and NYMEX, the story is no different. Brent is 82.78 while NYMEX is at 76.68. Both in the last 3 months it has formed a doji in the monthly chart, and till now doji are a spinning top. Now it has formed a doji till now, and in the weekly it is also in the monthly, as I had indicated, it is taking support at the 50-month moving average. So that's acting as a very strong support for these two oil commodities. And in the weekly, last week it has formed solid red candle, a bearish engulf type of a candle, though you cannot purely call it as an engulf, but it's more like a bearish engulf. At least definitely for NYMEX CTA it is a bearish engulf. For Brent it's more like an engulf candle, and in the daily it is like what you call taking support at the Bollinger Lower Band, which means once again this month March we expect sideways movement to form another spinning top or doji with the support at the 15-month moving average. If that is broken down, then we can expect further fall, which I don't expect it to happen in the coming days. Thank you very much.